Welcome to Commodities, and here we're looking at gold on the weekly chart, just working through the triangle here, and on the daily chart we can see that the market is overbought here, and we can also see on the daily bar here that it's closed lower than it opened, so we've got a reversal bar here, but the Elliott wave is suggesting this is the top of a third wave and will be a fourth wave pulling back and then a fifth wave to the upside. However, we should still take this on board here, these two signals, and be a little bit cautious. The current wave count that we've got for this here is essentially up for one, back for two, up for five waves here, up for third, back for fourth here, which should pull back 38.2% of this move of the third wave here, but also probably more importantly the fourth wave of one lesser degree, kind of where it is now really. So let's just drill in and have a look at that. But once wave 4 is completed, we'll see wave 5 up here. Wave 5 should be about the same length as wave 1 here. So you can take that on board there. So we may not reach the 1300 here, as I mentioned in the text, but towards that sort of area, the 1290 plus sort of area. Right, so just move in here a little bit closer. The thing here is that the wave 4 here may not just be that simple. First of all, it's if I've got a smaller chart here, okay, this is a bit better. Don't worry about that wave A here, that's just another count. We'll put that out of the way for a moment. We're just sort of focused on this particular wave 4 correction and remembering that pulling back to the wave 4 of one lesser degree here. So first of all, we've got five waves here, so this can be the A wave, the B wave, and the C wave. Okay, so from that point, it can move straight up from there. But it has moved rather swiftly here. The C wave, in a correction, an A wave moves sharper, and the C wave is more, more of an angle like this here. And the more angle that is, the stronger the next trend up will be. So this is likely to be 1, 2, 3, 4, and 5 here. So if we get 5 waves here, we'll have that as the A wave, then we'll have this as the B wave here, and then we'll have this as the 5 waves here as a C wave here, and then move up from that point there. So this is the likely scenario here, and also wave 4s tend to be a bit sideways and complicated and so on. So we'll be looking at least sort of 3 swings here, but this would be the key to look for. A move below the 1272 will give us an impulse wave to the downside, and if we do get an impulse wave to the downside, that means after a corrective rally, a 5-3-5 structure, we'll get another 5 waves here as well. The silver market is much the same as well, same sort of pattern. I've drawn it out here giving 2 paths, so it can move down to this point here and then just nick off up to the next level up here, or we've got an A wave, a B wave over to here, then a C wave down to here, off to the wave 4 of one lesser degree, and then a move up through here. So with all corrections, in terms of entering corrections, it's always better to wait until they have matured. Sure, you might miss them, but in the long run, better wait for a safer bet. The copper market, a couple of things here really is that the daily chart here is oversold, so we're looking for a bounce, and you could probably count 5 waves down here for a 61.8% retracement level. So 1, 2, 3, 4, and 5 here. But I think that the 5th wave that we're looking for here may not be complete yet. I think this is all part of a 4th wave. We've got one more little low to make, and then we'll have the larger bounce. But I just wanted to point out that I could be wrong. We could get the 61.8% bounce here. My reasoning behind this is this particular pattern that we're looking at here. So we've got the 3rd wave down. We're looking for the 4th wave and the 5th wave, and then we'll get the larger bounce. And the reason for that is because this particular move here is fine as the A wave in 3 waves, ABC, but this one here is in 3 waves rather than 5 waves. So it tends to sort of lead us to this being just a B wave here, an expanded flat. If that's the case, then the distance below here that this broke will be pretty much the distance below above here as it goes. So look, anyway, in this move up through here, we'll be counting 5 waves, and we thought that may be in the case when this little move here happened, and we could see that this one here was corrective, so we knew we'd make a new high above here. That's the case. So the little third wave's in play now, so we've got 1, 2, 3, 4, 5 for the third wave. Fourth wave here will be, fourth waves are bit choppy and sideways and whatnot, and then the fifth wave up through into this area through here. We can see that a little bit easier on this chart here, where we've got this swift move up as wave 1, the A, the B and the C here, then the 1, the 2, the 3 here, the 4 and the 5. So now we've got the A, the B and the C for the fourth wave. It may just be that A, B, C, because really this is quite complicated here for wave 2. So it might just be quite simple, but as I can see here, this 3-wave structure down fine. This one here, the B wave, looks like in 3 waves, so it looks like it will come back and test the 304 before pushing up higher. So just be a little bit careful on those on those copper stocks and whatnot, and consider this particular move up a bit of a sucker rally. The oil market should push higher through 107 once it's finished this here. This just on the 15-minute chart, this move down from the high here is in 3 waves, an A and a B and a C. So that means that this is an A wave, this will be a B wave, and this will be a C wave here in 5 waves. So 1, 2, 3, you should be able to count 5 waves in here, complicated fourth and down for the fifth here. So the next time 107 becomes support, you can go long, and you can also scale in through 10, 20 and 30. Support found on 30 would send this market up into the 108 and possibly higher from that point there. So it's good that it's popped down from this point here, and look to go long on this support here. And the other point here too is like we're talking with gold just a moment ago, and that is that this C wave here, you can see how it's on it. It's not sharper than the A wave here with me, so it's more of an angle. So that sort of helps you with the personality of what the pattern is, and it's just really a sign of strength, really. So, but we need confirmation. Elliott is one thing, and the price here is another thing. So support on the closest largest number, the 107, is what you're looking for, for the market to prove to you that it's strong enough to go up. And you can see from this point here is where the supply is here. So if the market can move above supply and sit on there, then you know that, well, at least you've got, the Elliott count on your side, and you've got the trading levels or the price on your side as well. Alrighty, the gas market, look, as expected, we knew that the daily chart here, we knew that it would be struggling at the old highs here. Also, we understood that, as mentioned last time too, this move up here hadn't been corrected, even though it was a 5-wave structure. So it's had a bit of a correction now, but it still needs more time to mature on 472 and finding support on 480 here. This particular structure up here is not a good looking structure. There's overlapping wave structures from this high to this low here. So in counting this in 1, 2, 3, 4, 5 with the overlapping structure here, it's not a nice looking structure. In fact, none of these are really nice looking structures. This is not too bad for an A and a B and a C, but look, anyway, it's not the best. But look, let's just wait for it to mature here, and if we can get an A wave, a B wave, and a C wave here, some 3-wave price action, or a really nice solid support on 472 here, then that's what we can be You know, that's the name of the game here on this one here. This little move up here does appear to be impulsive. It does appear to be in a 5-wave sequence. So perhaps he'll just pull back 61.8% and then find support on there. If you can find that, you know, also adding on to the 475 as well. But I see this market as a little bit sort of high risk for the simple terms is that we don't fully understand. It's not a clear wave structure in this market, so probably better to stand aside. Into the grains, soft commodities, soybeans here, pretty much on track here. So we're looking for this correction at the 1500 here. It's in its later stages. It's completing. Wave 4 here normally pulls back to the wave 4 of 1 lesser degree here. So we've been talking about that, and we've also been talking about the 1400 here as well. We're looking at this particular leg down through here as wave C. Wave C will have 5 waves in it. And we're down here somewhere in this structure coming down. We're sort of in the lower end of the 3rd wave here. Now, I do have 2 counts here. They're pretty much the same. They're both pointing further down, so it's not going to make much difference. So I won't get involved in the guessing game with it. But just to go back over this, we've got a very clear 5-wave structure here for wave 1, an A and a B and a C flat correction for wave 2, or probably even expanded flat really is a correction. Expanded flat is where the first leg comes up, the next leg comes down and trades below this one here, and then this one moves up here and trades above this one here. So it's just expanding, but it's normally a trap for the shorts, normally a trap for the longs here. But after a expanded flat, you normally get quite a strong move in either direction. Expanded flats normally happen in wave 4s, so the textbook says, but I see them in wave 2s a lot, so I don't pay too much attention to that one. But wave 3 here that we're looking down from wave 2 down to wave 3 here is we've got 1, which is nice and clear, 2, we've got 3, which is nice and clear, at least for me here, and then we've got 4, and then we've got down for 5 here. Now this is the one that bothers me. Now in commodities, yes, we normally get it's not a rare situation where you get wave 5 here being longer than wave 1. Okay, in stocks it's normally the 3rd wave that's the longest. In commodities you get this quite often. So it is possible that this is the 4th wave sitting here as well, but I'm also too, just with common sense, you can see that this move here, this one here is longer than the previous one, this one here is longer than its previous one as well. So essentially this is expanding to the downside. So I'm also looking at this move down through here not being wave 3 here, is still wave 3 to come down through to here further. So it's just basically cascading down. I don't want to sort of confuse it, but just pointed out that from this wave 4 here, we've got the 1, 2, 3, 4 in blue, like I mentioned before, and the 5 here. But I'm also thinking that this can be down here for the blue 1 and back for the blue 2 here, but then this little gold yellow one here, whatever, is down for 1 here, back for 2 here, down for 3 here, back for 4 here, and down for 5 here, which would just make the 3rd wave in blue. So we can have further downside to come. So I'm a little bit unsure about that, but the main point is that this is down. The rally here that we're looking for here, this is in 3 waves here. Now that this has moved down, above these ones here. So, this rally, this correction pattern here may get a bit more complicated. It may, move down a bit further and then have another little 5 waves up here before moving down as well. Or it can just sort of have 5 waves here moving down through here, have an ABC back and then move down. The main point is that it's still going down. There's no long positions here yet. And it's just that basically it's just bouncing along the 1400 here, trapped within group 1 here. So it's a bearish situation. We're still searching for the lows there. So that's that. No real, unless you want to hold short, that's fine. The wheat market and the corn market are still searching for their lows as well. We're looking at 580 and 572 here. Once again, this wave structure, it's still pointing down. There's no evidence of a move up. Now, I know that the weekly charts are moving deeply into their oversold areas, and we will see a stronger bounce soon. But once again, what we are looking for, as you know, is just a little simple 5 waves up like this here, because if we get 5 here, then we'll get another 5 here after an A and a B and a C. It's not that we can see past these 2 here either. We would need to see after a 3-wave structure, we would need, well, if we get 5, we know we'll get another 5. Okay, that's as far as we can see. So we just have to wait at that point and look at the correctional pattern that's going to happen from that point. And if we do get this larger 5 waves here, then we know that because we got this 5 waves, we'll get another large 5 waves. It's just a building block, fractal building block, so to speak. So, and this is what's happening in sugar at the moment. We'll get there in a moment. But corn is much the same as wheat. We're looking for a low. We may have a low in here, as I mentioned last time we spoke, because it does appear that we've got a little impulse wave going up through here. But it's a little bit unreadable, so we'll just sort of wait and see while wheat is still moving down. Then, and this trend here is obviously still moving down as well. We need to count it down. This wave structure moving from, I can kind of figure out all of this here, and I can figure out this here. This is a bit iffy, really, but this is a bit hard to read as well here. But what we can see here is we can see more volume coming into the markets. You can see the ranges in these bars are quite much larger than these ones here. So we can see there's obviously volume buying coming in at these lows here. What's the date now? Sort of we're also changing contracts shortly as well, so we need to be looking at those charts. So I'll try and make an effort and do that this week. And so let's move on to coffee. Now, with coffee, the move down through to here, we're treating this as a 5-wave structure to the downside, so we're looking for a 3-wave structure back. The textbook thing is the 50-60% retracement level up here. The little move that we've got here at the moment, I thought it might be developing into a structure that we understood, and we do, but it appears to be in 3 waves. Here's a better picture here. So at the moment, it's we had 5 here, so I knew we'd get another 5 over here. But this moving down this far here and overlapping the top of this structure here it sort of makes it corrective. So basically it's a retest of the closest largest number, the 180, and it can fail from here. If this 172 becomes the retested resistance, then it will move further down. I can kind of see here that this move here can be an A wave, a B wave, and a 1, 2, 3, 4, 5 for a C wave here, and then move up through here as well. Even though it's possibly corrective here, it can still move high in a corrective manner. It's just that we know that it is corrective, that's all. So if this market comes down here in 5 waves down through here below the 172, then find support, you could probably go long from that point there and head upwards. If it doesn't go below here, which it probably will, but if it doesn't go below here and find support on 175, then the weight will shift to the upside and you could go long from that point there up to the 180. So in a nutshell, we've counted all the wave structure down through here, so we're looking for that wave B a little bit further up here. Where are we here? Sorry about that. We're looking for a move here. Look, so that's it. So we're basically looking for an A wave, a B wave, and then the C wave over here. Once again, if I'm wrong, because I always need to look at both sides of things, if we're up here, we find support on the major trading level here too, then we will be certainly going long from that stage there, and then we'd have to look at this being an ABC correction in here. But as it stands at the moment, it counts reasonably well as an A wave down through to here, so we will leave it as that. The sugar market, So the way we're looking at this is that this move here appears to be impulsive on the daily. All of this here appears to be corrective. It's got overlapping wave structures across here, and the best fit is the A wave to here, an A and a B and a C wave to here to make the larger B, and then the C wave down through here that we've been counting in 5 waves down, 1, 2, 3, 4, and 5 waves down in here, and this counts quite nicely as a 5-wave structure down into here. So we were looking for a bounce here off this 1650 medium level through here, and it would have been, I was saying before, it was an interest if we see a 5-wave structure up, which I think we have, and we will also gaining support on the closest largest number, which is $17 here, and that seems to be the case. So this little move up here, as we pointed out last time, appears to be impulsive. There's no overlapping wave structures in there, and now it's finding support on the $17 there. So it should be of interest to us, well, if you wanted to go long, because if we get 5 waves here, that means that we'll get another 5 waves over here. So if we bought here, we can be reasonably confident that the market will take us to 1750, and we should be able to protect ourselves from that stage, manage the risk better anyway. So the move up here being impulsive, we're looking for a 50-60% retracement level back down through to here. But yeah, and you could probably buy from this point here, but we're going to keep the stop under this orange line here, under the 1672. So yeah, let's just sort of watch this develop. The other point here is that you can probably even a safer bet to buy into strength. So buying new highs above this one here. So long on 1720 and 1730 if you're not long already. The orange juice market had a spike down through here. So it's this. The thing with this is that now this spike's come down through here. It's got overlapping wave structures here. But looking at this bigger pattern here, is this little pattern in here is in 3 waves. So whatever happens beyond here this is corrective, so whatever happens beyond here will be corrective as well. So we can either have an overlapping wave structure here on wave 1, and this market will push up here into wave 5. The other count that now that's got overlapping wave structures is that we would may need to look at this as an A wave, a B wave, and then a C wave in 5 waves here as such, and then a move up. So they're the 2 options that we've got now that we've got this spike here. So we just need more price pattern action to confirm what's going to occur now. So that's where that is. The US dollar is sitting on 80.50 here, and in a nutshell, I've mentioned before, as long as it stays above this level here or above this low here basically, then it's still got a picture to the upside. Even if it took this low out, it still has a picture to the upside too, because we'd have to look at this as an A and a B and a C wave here, and then a move up, which is part of the bigger picture being above the 80 here, the major trading level here. So while it's above this, it's a positive market. There's just layers above this that were positive as well, the 80.30, the 80.50. So let's just, there's not a lot there, but it's still working into the trading range, the high, the low here, the high here, and the 80.50, here as a price point as well. So I just really want to allow this market to continue moving across here and developing its pattern here. This is like an A and a B and a C wave here now, because we've got 1, 2, 3, 4, and 5 here. There could be another move down through to here. So we're still going to need a session or 2 before we can see what's going on here with this to confirm it properly. Alrighty, cheers.